Welcome back, everyone, to NYU Grad's Daily Podcast. I'm recording this on Sunday evening, right around 8 o'clock. I'll try to release this tonight so you guys can listen to it and look at the show notes before the session opened on Monday. But I'm covering Friday's December 1st session. Let's jump right in. It won't be too long today. It was much of a continuation of the previous day and week. But jumping right into the breadth numbers, we had 769 new highs on Friday, and we had 121 new lows. So that's awesome for the positive side. That's like outpacing 6 to 1. We had 80% of shares advancing with 15% declining. And right now, there's only 24% of shares under the 50-day moving average and roughly 41% of shares below its 200-day moving average. So markedly better going into the end of the year. It looks like outside of a black swan catalyst or yield spiking, we are, even if we don't go anywhere and we just go sideways right here, it's pretty bullish, right? Because it's neither here nor there. I mean, it's mostly the Magnificent Seven, but the S&P is like up 80% if you just count the Magnificent Seven. If you take them out, it's only up like 4%, and that 4% of the S&P 493 happened like in the last 2-3 weeks. So that's the complexion of it, but it's still very bullish on the end of year front. What else can I kind of go through here? So it's going to be the story of yields. I keep mentioning to watch yields. Yields on Friday, the 10-year, went as low as 4.2. I mean, we are knocking on the door of sub 4% 10-year yields. I mean, at this pace, we'll be in the threes before the new year, and that would create a lot of momentum, additional momentum for the bull case. So on Friday, the SPY, the S&P ETF index, yearly high. It's also a sneeze away from lifetime highs. XHB, the home building index, also new lifetime highs in sympathy of lower yields. I think, just kind of rapid fire some of my thoughts on the Friday session. Jerome Powell apparently spoke twice. I didn't listen to it at this point. I mean, it's the reaction that really matters, and it seems like no one believes he's going to be vigilant in fighting this war on inflation, and everyone's calling his bluff. Thus, the yields are going down. We're super overbought. I do expect a pullback, which would be healthy, or sideways action, but more likely than not, a pullback of maybe like even 10%. That would be actually very healthy. Nothing to panic about. The real question is, if we pull back, is there enough time for more upside before the new year? Because we only have like 17, 18 trading sessions left in 2023. Gold also breaking out, whether you're looking at the just the gold price or the GDX or GLD, it's very bullish, but it is at the upper extreme of a pretty long-term range. If it breaks out, it's going to move very high. But it can also, in the past, it has tried to break out and faked out and then come back down. So we'll have to see. Everything's dependent on yields, right? Like, that's really all that matters at this point. Another thing that stuck out to me is a firm holding. So the consumer is still going strong. Companies like Affirm, Klarna, they're being used heavily at checkout. So if you're buying sneakers or gifts for your, family or vacations, people are checking out and using buy now, pay later. And these APR interest rates are sky high after the grace period. But when you take a look at the chart of Affirm, They are up in this year from the low of $8.80. They close at like 38 and change. They're up 426% this year. Okay. The last time that it got anywhere close to this percentage gain was back during the COVID time in 2021, where it went from a low of 46 and 36 cents all the way up to $176. So that at that time consisted of 382% gain. So we're well stretched above even the COVID ramp. I think this will eventually hit a wall, right? I mean, there's a wall at 46. We'll see. But I think this gigantic bounce is due for a pullback. But who knows, right? Like, they can just keep talking their book and say, oh, we're going to be dovish, blah, 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 blah. Another point that I wanted to make, there was an excellent video that came out over the weekend with Michael Pinto. I definitely want you to check that out. Adam Taggart on Substacks as well as on YouTube released it. I will include the embedded YouTube video in the show notes. I highly recommend you watch because Michael Pinto doesn't pull any punches, and he shares data on why he feels the way he does for 2024. But we all know that this can go longer than people can stay solvent. They can just keep printing, right? And we can have hyperinflation. So I highly recommend you watch that. Let's see. What was strong on Friday? I'm gonna just rapid fire some of these names, okay? Carvana up 12.39, Lyft up 12.02. These are all percent. Affirm Holdings up again, up 9.47%. Etsy up 8.22. Coinbase up 7.25. Airbnb up 6.87%. Klaviyo up 6.72. Kava up 6.5. AI up 6.08. Sweetgreen up 5.84. I could just go on and on, but the short version is the mega cap techs didn't do that much. A lot of it was like on the Russell 2000 and riskier names, like what I just bulleted through. Yields were weak. The dollar was weak. They move in sympathy. There are some economic reports coming out this coming week, but just continue to watch yields above. As long as yields and the 10-year stays below 4.5%, the bulls will have sail in their winds. If something happens and it triggers yields to go above 4.5%, that's bad. It's as simple as that. There's only like 18 trading sessions left. So it's not the time to do anything crazy or new. If you are in long positions, just ride it out, right? Why would you do anything, right? There's tax implications right now. So just wait till 2024. So that's really all I have to report on the Friday session. I'll talk to you guys after the Monday session. Have a good one. Later.